Would you like to save hundreds, if not thousands a year for just a few minutes worth of work? If you haven't filed your property homestead exemptions yet, what are you waiting for? Hey everyone, Alex Hunter here from Your Realty Group, and welcome back to another exciting video from Your Realty Info, where we share helpful tips about current real estate topics. In this video, we're going to go over the different types of property tax exemptions, what kind of discounts they give, how to file, and examples of what you could save. Texas has a heavy property tax burden due to it having no state income taxes. This means property taxes are primary way that local governments in Texas fund public services such as schools, emergency services, infrastructure, etc. The benefit to filing homestead exemption extends well beyond capping the increase and paying less for your property taxes. It also protects you if any creditors decide to come after you and try and take your home for not paying a bad debt. The most common type of exemption is your general residence homestead exemption. This exemption is available to anyone who owns and lives in their primary residency. The exemption amount is for 20% of your home's value, with a minimum being $5,000 and a maximum being $25,000. Alternatively, all residence homestead owners are allowed up to a $40,000 resident homestead exemption from their home's value for school taxes. If you're in a county within the state of Texas that allows for flood control and farm-to-market taxes, you can claim an additional $3,000 towards your homestead exemption. Next, we have the over 65 homestead exemption, which is available to homeowners who are obviously over the age of 65. You can apply for this exemption even if you aren't 65 yet, if you are applying for the year in which you will be turning 65. For example, if your birthday's in September when you're turning 65, but you need to file your exemption status by the deadline of April 30th, you can go ahead and do that and you'll still qualify. Now, this exemption is $10,000 above and beyond the general homestead exemption of $40,000. This exemption cannot be combined with the $10,000 disability exemption. One other very important thing to note is that if you are 65 or plus and can't afford your property taxes even after all the exemptions have been applied, as a last case scenario, you can defer all of your property taxes until such time as the home is transferred out of your name. Now, that could be either you pass away and you leave it to an heir, or you decide to move out of the property. Then there's also the disability homestead exemption non-vet, which is available to homeowners who have a disability. They must meet certain requirements of the Social Security Administration as being a person with disabilities. The exemption amount for this is also $10,000 in addition to the general residence homestead exemption, and cannot be combined with the over 65 exemption. The disabled veterans homestead exemption is available to veterans who have service-connected disability. The exemption amount for this varies depending on the degree of disability, anywhere from $5,000 for 10 to 29%, $7,500 for 30 to 49%, $10,000 for 50 to 69%, and $12,000 for 70 to 99%. And of course, 100% disability completely waives all of your tax liability and you pay no taxes. And finally, we have the surviving spouses exemption, which includes our armed forces and our first responders who died or were mortally injured in the line of duty. These survivors may qualify for 100% exemption, meaning they don't have to pay property taxes at all. That is thousands of dollars in savings. Now, first responders are considered EMS, police, and fire. However, there are other related professions that may also qualify. Both the armed forces and the first responders must have the home claimed as their homestead at the time of passing. This tax exemption can be applied to surviving spouses, and then may also be applied towards parents or children under certain circumstances if there is no spouse or surviving heir. See the link in the comments below labeled Surviving Spouses for a full list of eligible first responders and other eligibility details. So now that we've gone over and know what the exemptions are, here's an example of how much you could save. Let's say you own a home worth $200,000 and you qualify for the general residence homestead exemption. Your exemption amount will be $40,000. This means you would only pay property taxes on the $160,000 left. If your tax rate, which you can find on your local county's appraisal website, let's just give a hypothetical of 2.5%, then your tax liability on a $200,000 home is $5,000. With the exemption applied, that actually lowers your tax liability down to $4,000. Add that up over a 30-year mortgage, and that's a lot of cash. Now that we've talked about the different types of exemptions, let's show you where and how to complete the form. The best part is once you've done this once, You won't need to do it again unless the appraisal district reaches out to you to have you recomplete one, or if you end up changing addresses and need to file a new exemption for your new address. So if you're a homeowner in Texas, be sure to check if you qualify for any of these exemptions. It could save you a lot of money on your property taxes. It's important to note that you must apply for these exemptions by April 30th of the year in which you're claiming the exemption. The good news is they'll retroactive them for the previous 2 years as long as you get it in by April 30th. Thanks again for watching this video, and don't forget to pay it forward by like, subscribe, and sharing this video to help each other out.